Good morning, everyone, and thank you for joining us on this June afternoon as we have our annual Finance Officer and Auditor workshop for finance officers and auditors. And just thank you for being here. It's a sunny day outside, and I know it's early summer, but thankfully it's not blazing hot outside. And it is the middle of the day, and hopefully we will get some good information out to you so that you can use that out in your districts and in your audit firms as well. And so, Josh, if you flip on over to our agenda for the day, I know I'd mentioned in our invite that we will be talking about GASB 87 and leases a little bit, but also just also wanted to mention that we'll be talking a little bit. I don't know if some of you were in our superintendent's webcast the other day, but Rob McKinney, talked about some federal infrastructure issues and late liquidation of some of the ESSER funds that are out there. But then, so we'll talk a little bit about that here at the beginning, and then also some common audit issues. We like to talk about that each year so that maybe we can mitigate some of those throughout the year coming up for next year's audit. But there's always something new that comes out each year. Hang on just a second. And so, and then so that's one thing. And then another one is publication requirements. I seem to be getting a lot of those pop up each year. So I thought I'd go over those so that we don't get all those questions around audit time as well. And so we'd also we're going to talk about tax rates and levying requirements as well. Some new things that are coming out there. So let's get started and roll over to our next slide. All right, so the next one, I guess. And all right, so Robin was going to be here with us today and was unable to join us, so I'm just going to kind of take a stab at this. And so what we're going to do is just, I'm going to take a stab at this. So I'm just going to read through some of these and just skip over some of these. And so it's just kind of a brief overview of some of the latest that's coming down from the feds from the Infrastructure Act. And but what a lot of it deals with actually transportation and some of the funding opportunities that are out there for buses and clean air and those kind of things from the EPA. So this first slide, I'm not going to read through it, but it's just for your information, so you'll have it. And so just offset some of your questions here right off the bat. Yes, we will be sending out the slides, and yes, this will be recorded. And so after the fact, if you or anyone else in your organization wants to watch this in the future, you'll be able to. And as you will notice here in a little bit, one reason why let me just back up. One reason why we had you register is the opportunity for CPE credit. So we've been trying to tweak ways to offer the opportunity, and so I think the last time I tried this was maybe 2 webinars ago because there was a poll piece in the software that we use in Teams, and little did I know that it was temporary. Anyway, we had to pay for it, and so but there's another Forms, Microsoft Forms thing in there. So I'm using that this time, and it's part of the software. And so I'm going to throw up some polls on here. It's just asking you if you're listening, and you just check yes or no. And actually, you can check no, and as long as you answer the question, it's recording your answer. That's the main thing. So you could say yes or no, either one, and it's going to check your answer. And that's all you need to do in order to record your answer for the poll question for attendance for CPE credit. And depending on how long we go, we're set up for 2.5 hours from 10 to 12:30. I don't think we're going to go that long because I just don't think we will. But for however long we go, we will get some CPE credit. And I'm guesstimating maybe 1.5 to 2 hours And so just giving you a heads up on probably how long we will go, but just wanted to let you know that. But the polls will pop up and they won't stay up forever. They probably stay up for maybe a minute or so each time throughout the morning. And as they do, just click on yes or no, doesn't matter which one, but just as long as you do answer when they do pop up, because it's a one-time opportunity, and just as long as you answer for the CPAs anyway, as long you know that as long as you answer 75% of them throughout the morning, you will get credit for CPE. And so just wanted to let you know how the polls work. So just answer those as they pop up and you'll be good to go. So anyway, back to the slides. So the infrastructure bill, as you know, provided money for roads, bridges, and all those kind of good kind of things, and it stretches over 10 years. So on to the next slide. Yes, I mean the finance officer hours work just like the CPE. So as long as you answer the questions, yes or no, just like the the other ones, answer the questions as they pop up and get 75% of them, you'll get the finance officer hours as well. That's just to help us to verify that you were here in attendance and all that kind of stuff. So yes. All right, so the EPA offers some clean school bus program opportunities, and what that does, it's going to allow some 200. It offers 250 million in clean school buses, and 250 million dollars for zero emission school buses nationwide. And so that's a lot of money. And so what actually they're trying to do is get old school buses, old diesel school buses, and right now I know at the pump, if you can get rid of diesel, anything, whether it's a truck or anything, whether it's personal or from your school, it's probably would might you might think that is a wise investment. So anyway, just throwing that out there personally. But anyway, so if you want to look into those rebates, there's the link there, and like I said, these slides will go out to you. So there's the link on how to access that. And if you have questions about that, you can contact our own Elisa Hanley, and there's her email address right there on site. So if you want to do that, go right ahead. Next slide, please. And then another opportunity for grants, and there's a lot of them out there for energy and just clean energy opportunities for fuel and vehicle upgrades, as well as HVAC and lighting and controls, ventilation. There's a lot of opportunities for grants, but and there's a link right there for you to subscribe to those. So next slide. Okay. And so then the Department of Transportation is also offering, though, not so if you get the buses that offer this clean energy and probably electric, um, powered by electric, you got to have a way to charge them. So they're also offering opportunities to upgrade your facilities to do that. So and they're called community grants. And so what that will do is install electric vehicle charging and alternative fuel in locations at public schools, parks, and publicly accessible parking facilities. And they're going to be prioritized, though, in rural areas and low and moderate to low income neighborhoods and communities as well. And so there's 1.25 billion in competitive grants to do that. And there's the link to subscribe to those opportunities. All right, next one. And here's just some more resources that you can look into, and there's the links to find those as well. All right, next slide. Okay. So let's see here. I see somebody saying they don't have any sound. Well, I'm not sure.
Steve, I can hear you perfectly.
Okay, okay. Well, I'm just checking. I saw some chats that I don't have any sound. Um, there should be sound. All right. So there's also federal grants, and like all of these opportunities that I mentioned already, there are opportunities that are not provided by KDE or flowing through KDE they are directly from the federal government. So please keep that in mind as well. So they won't go through GMAP, and they won't, there's no pass through. They're directly from the federal government. So all those sites and links that I've showed you are on the pages before that we looked at. You need to go to those sites and those links. And if you want to look into those, you can, and those will be directly provided from the federal government themselves. All right, next slide. All right, so the next thing we're going to talk about is late liquidation, and that's talking about the money, the extra monies that we've received, or you all have received through the packages that have been provided. Whether it's the CARES Act, ESSER 1, and ARP ESSER funds as well. All right, so let's go on to the next one. So here's a little graph that describes it a little bit better. So ESSER 1, which is basically the CARES Act, that deadline is coming up very quickly as far as obligating your funds, so basically encumbering them. And so that's September 30th, and that's, almost exactly 3 months away. So that's right around the corner. So if you look at that and then look at the 120-day liquidation deadline, so that's meaning you got to spend the money or actually pay out the money. And so the obligation deadline is about 3 months away, and then just 4 months after that, excuse me, you've got to pay out the money. And so what the federal government or what the Department of Education recently said is that you've got to, or they're offering in special circumstances, is possibly a 14th month extension on liquidation on paying out the funds. And we'll talk about the opportunities for that here in just a minute. And so then on Gear 1, which is also part of the CARES Act, same deadline, same liquidation dates, and all that. And then ESSER 2 is obviously next year, and then ARP ESSER is in 2024. So let's go on to the next one. All right, so here's the definition of obligating and the obligations and what the obligation means. And so this is the definition. I'm not going to read through those, but just giving you opportunity to have this in front of you or be able to read it and have it by your side there in the district, so you know what it does and what it does not mean or stand for. Because an obligation, like take for example down at the next to last line there, travel, there's no forward or backward looking in travel. It's you either do it or don't. It's not forward looking travel or anything like that. It's whenever you travel is when it's done. So when the travel is taken is when that obligation is made. All right, next slide. All right, so here's where the Department of Ed has given some leeway, or possible leeway, or about a month ago, actually, they came out and said that they're, especially due to construction projects and facility projects that take a lot of time. And so that's why they put this thing out here. So if you look at the middle of the paragraph there, it said permission for up to an additional 14 months after the end of the standard 120-day liquidation period is determined on a case-by-case basis. And so what we're going to do, or what they've decided is, in certain circumstances, and they haven't really explained how the process is going to work and all that just yet, but they may allow up to an additional 14 months for those expenses, certain expenses, to be paid or liquidated beyond the original date. So let's move on to the next one. And so here's our questions to the U.S. Ed, and we don't have the answers yet, but we're just letting you know what kind of questions we have for them. Can the states and districts plan for an extended time, or is this for unforeseen circumstances? We don't know just yet. And what is the process for requesting the late liquidation? We don't have an answer to give you yet because we don't know what they're expecting of us or you as a district. And how will the state systems track? Is it on a project by project basis, or we don't know. And how will extension time for late liquidations be determined? Is it up to 14 months or is it just a flat 14 months? You know, that's something that we don't know yet either. And how will that impact audits? You know, because obviously 14 months is longer than 12, so we're crossing two additional fiscal years. So that's definitely going to, in our mind, impact audits. And so until they answer that, we don't have it. Until they tell us the answer, we don't have an answer for you on that either. So that's what we have on those two items. And are there any questions on those? I mean, all I have is basically information. I may not have a lot of answers to questions, but I'll be glad to take questions. But if not, then we'll move on. I believe the next slide is Eddie's GASB 87. Is that right? Yeah. Well, two more slides. Yeah. So we'll stop right there. And yes, all the slides will be provided, and the recording, as I mentioned earlier, will be provided after this. And as I say that, let me pop up our first poll. It's low coming up. There it is. So I'll leave that up there for about a minute. And then Eddie, you can go on whenever you like.
So can I share my screen so that I can flip the slides myself? Or
oh, that's fine. Sure, that's fine.
Okay.
Yeah, that'd be just fine.
Okay, you should be able to see the GASB 87 leases screen now. Can you see that, Steve?
Yes, we can see it.
Yes, we can.
Sorry, I was muted. Yes, we can.
All right. So this is, I apologize in advance. This is a very dense, chewy subject. And so the slides were designed to be partially slides for a presentation, but partially a summarized version of GASB 87, so that you can go back to this and have answers at your fingertips. And you may notice throughout the presentation where I've actually referenced the GASB paragraph number, or the implementation guide paragraph number. So you can go back to that and double check me, because I've spent a lot of time reading both of those documents and applying them to how they work within Jefferson County Public Schools. But every school district is substantially the same as every other school district, and every school district is extremely different than every other school district. So you'll need to apply the rules to your school district, and you may disagree with my interpretation of the rules. But if you do, that's why I present the GASB reference, paragraph reference, so that you can go back and double check me on your own. So let's get started. So the first thing is, what is a lease under GASB, the new GASB 87? So first of all, it lasts more than 12 months. Now this was really important because a lot of the leases that Jefferson County Public Schools have are 12-month leases or less. And so all of those would be considered operating leases, rather than leases that should be capitalized under GASB 87 and could be excluded for that purpose. So it has to be an exchange type transaction. Usually it's the right to use an asset like a building, copier leases, bus leases, those sort of things. Most of the time at Jefferson County Public Schools, we are the lessee. So we are leasing buses. We are the one obtaining an asset instead of purchasing them. And so we get to use the buses, and we pay the lessor certain routine amounts of money for allowing us to use their buses. We can also be a lessor, meaning like in situations where we may have a part of a building that we're no longer using or something like that. And so we are leasing the building to, say, the city of Louisville, and they are setting up a neighborhood center or community center in that wing of the building, and it's scheduled to go more than 12 months. And so then we would be getting routine amounts of money for over the term of the lease, and they would be getting use of our asset. But those are much less common. So we're going to spend most of our time today talking about the lessee example. So if you haven't started planning, and this is mainly talking to finance officers, if you haven't started planning, then you are behind the 8 ball. You are already behind on your financial statements for this coming school year or this coming fiscal year. So you should have started this during this past semester and be farther along. However, if you haven't started, it's time to start. So because it is effective and required to be considered on your financial statements that are issued as of June 30th, 2022, otherwise known as next week. So how do you start? You have to do an analysis to see if you have leases. So this is the time to do those searching. You're in a period that when you're incredibly busy and don't have a minute to spare, but you've got to do it. So if you haven't done it yet, you've got to start. So check your minutes, your board agenda minutes. Most of these will have to be approved every year or every handful of years. I went back a number of years when I was reviewing our minutes. I believe I went back 12 years to make sure that I didn't miss one that was a long-term lease that had been set up many years ago. Also check with your facilities folks, your IT folks, your transportation folks, to see if they're aware of any. In Jefferson County, we have a print shop, a local, like an internal print shop, and they have copier leases. So it can be anybody, but the main groups are facilities, IT, and transportation. So you want to, once you've done all those steps, you want to get copies. You want to set aside copies of all of your leases. Like I have a folder set up, and they're all scanned into that one folder, so that when your auditors come in, they're going to do their own search for leases, and you want to be able to show your auditors that you considered every lease, whether it's operating lease or whether it's a capitalizable lease. And if you decided that it should not be capitalized, why you decided not to. And so you want to have that information for the auditors in case, so that they don't spend a lot of time and billable hours looking for leases that you've already looked at. And everybody could make a mistake. I could have missed one paragraph on a 15-page lease document that may cause it to be capitalized as opposed to operating, which is what I might have considered. So have all the documentation available for your auditor when they first walk in. And then best case scenario is you either have just a few that are immaterial or none at all. And your auditor agrees that it's immaterial and you don't have to make any adjustments at all. That's what you're hoping for. So leases can look very different when you're looking at them. There are basic leases, kind of like I described in the example, where you get use of say a group of school buses, 10 school buses. You pay a certain amount per month or per year to the lessor for the use of those school buses, and you're done. Well, you could also have a group of school buses where you pay a certain annual fee for the lease, and then you also pay an amount per mile for use of those school buses. And you can have additional things that make them just absolutely crazy, where you'll have a set annual fee or monthly fee that you pay, plus a per mile charge, plus a termination charge, plus an agreement to pay the taxes, or a purchase option, whether it's a bargain purchase option or a face value or book value purchase option at the end of the lease. All of these have to be considered in determining what the value of the lease is and whether it qualifies as a capitalizable lease. So when you're looking at your financial statements, what we're talking about is very similar to say issuing a bond in order to construct a new school. So these are long-term considerations. They're capitalized leases. And so they're going to go on your district-wide statement of net position. They're going to go down as a long-term asset. In our bus example, leased vehicles. But they'll also go down on your long-term liabilities as a long-term lease payable. So if you think about what we're normally used to seeing, if you're constructing a new school and issuing a bond for that new school, you are making two entries on your district-wide statement of net position. The first is you are constructing the new school, so you're debiting an asset. It's a long-term capital asset. It goes on your district-wide statement of net position, but you're also crediting long-term bonds payable. So it's the same thing for your long-term leases, a leased asset and a long-term lease liability. They're also going to flow through, because you're hitting in both places, just like your new school building and your bonds payable, they're going to flow through your capital assets footnote and your long-term liabilities footnote. We'll talk more about that in a little bit. So on general fund, you're really doing nothing, or any other fund. It can be Fund 2, it can be Fund 51, it doesn't matter. These entries are the same as they always would be. You budget whatever expense you're going to pay that year and you pay the invoice. There are no long-term liabilities. It's just debit and expense, credit cash when paying the lease. There is no entry for the long-term leased asset. So a few specific kind of outlier considerations that relate to financial statement presentation. First is GASB 87 specifically says that it's okay to group similar leases into categories for financial statement presentation. So I doubt any school district in the state does, but if you had leased buses for your student transportation and also leased service vehicles for your maintenance guys, then what I would recommend and what I would hope you would consider is having one category that's leased vehicles that includes all of them, both the student transportation buses and the service vehicles for maintenance. Group them all into one category, leased vehicles, and total them up and present them once, rather than having a whole string of separate leased assets on your financial statements or the face of your footnotes. Then GASB references that if the ownership is transferred at the end, and that includes a bargain purchase option. So if at the end of the lease, you have the right to purchase the copier for $1 or something like that, then it's not considered a lease. It's considered a finance purchase instead. So that would not fall under GASB 87. So you would need to consider whether it would fall under a long-term liability, and a capital asset if it qualifies under those rules. So you need to have a separate conversation with your auditor, but it would not qualify as a capitalizable lease under GASB 87. So then the items you're going to need in order to run the calculations and figure out what goes on your financial statements are the payment amount, any prepayments, closing payments, the term of the lease, and a discount rate. So we're going to go through each one of those separately. Lease payments. I already kind of indicated that lease payments can be trickier than they sound. It should be easy. Whatever you're paying, that's what your lease payments are. But like the example of the buses, you could have a set dollar amount per year that you pay or per month. Excuse me. I apologize for the allergens in the air and how they are attacking my sinuses right now. So you could have a set dollar amount per year or per month. You could have a amount per mile that you're paying. You could have various amounts, such as a cleaning fee at the end, and an inception fee or initiation fee or lease commencement fee. There are all kinds of different fees. And what helps me the most, we're going to go through the formulas later, but what helped me was to break those out into different components and say, okay, I have a lease inception fee or commencement fee or something like that. And so that's a one-time fee at the beginning of the 5-year lease. So I'm going to run a calculation for the present value of that once at the conception of the lease. Then I have an annual annuity, so to speak, of lease payments that I'm required to do once a year. So I'm going to present value that and add it to the commencement fee. So we'll get into those into the actual formulas in just a little bit. Then if you have GASB specifically, you see the paragraph reference, GASB specifically says if you have payments, a payment stream that's exclusively performance-based, so like bus miles driven, if you don't have an annual fee or monthly fee or something like that, then that is excluded from the definition of lease, even if you can predict the number of miles that'll be driven. That's what GASB says. So the lease term also should be pretty simple, but isn't always that simple. So it should cover all periods covered by the original contract. If it also includes all periods when either the lessor or lessee can extend if they're reasonably certain that they will choose to extend. It also excludes all extension periods if both can terminate, or if either can terminate, and they're reasonably certain that it will. If both the lessor and the lessee have termination rights, and then it's not those extension periods or those periods of the original lease that have a termination clause. If it's whether it's reasonably certain or not, those periods are excluded from the original lease. This is confusing. So if you have periods that when one or the other, the lessor or the lessee, can extend and is reasonably certain that they will choose to extend, or can terminate and it's reasonably certain they will not. So only the lessor or the lessee, but not both. If you have these periods and you're reasonably certain that you're going to continue it and you will extend or you will not terminate, then those periods are included in the lease term. If both the lessor and the lessee have termination rights, then it doesn't matter whether they're reasonably certain that that it will be extended or not, those are not included according to GASB. That's takes a little bit of thinking through. And then I mentioned before, if it's 12 months or less, then it's considered an operating lease, and is not included in GASB 87 because it's not not considered capital. So then the discount rate. Basically, you need to come up with a discount rate. You're going to be the one figuring out what that should be. And what I would recommend is coming up with a rate, something that makes sense to you, explain your rationale to your auditor and see if they disagree. They may disagree, but that's just a conversation you're going to have with your auditor. So one option is to use your incremental borrowing rate, like especially if you have a line of credit or anything like that, then that rate would be one option. Your average bond interest would work. If there is a rate that's specified within the lease itself, then that would be another rate to consider. But figure out what rate you're going to want to use and justify it to your auditor. You could it's up to them to tell you whether you're right or wrong, but it's up to you to come up with an estimate. So if you have a line of credit, use that rate. Like I said, I don't know how many school districts do other than us, but if you think about it, your bond interest rate is usually a longer term than a lease term. So it's not a perfect apples to apples comparison. A line of credit is usually very short term, like 3 months, 4 months, 12 months, something like that. It's usually shorter than a lease term. So just think it through, propose something to your auditor, see if they agree. So how you present value your leases. So this formula is an Excel formula, and this is how I'm doing mine. So assuming the first payment has already been made, the formula is equals to come up with the present value. So the present value is the rate at the number of payments and at a particular payment amount. So you can see what the different elements are. If you're familiar with the formula, you can run through it in Excel. I'm gonna try not to belabor this stuff, the real technicalities too much, because like I said, these slides are intended to be almost like an implementation guide, in addition to a presentation. And so where it gets really chunky, I'm going to kind of gloss over it a little bit, but feel free to ask questions or put something in the chat if you would like me to answer anything. So to put this formula into practice, if I'm leasing a building for $10,000 per year for 5 years, paid at the beginning of each year, then my formula is the third bullet down equals present value, open parentheses, the lease discount rate that I have assumed. So 3%, let's say that's the average of my outstanding bonds interest rates at 5 years at negative 10,000, because remember, $10,000 is an outflow of money, so that's why it's put in as a negative, and that'll give you the total present value of this payment stream of $45,000 per year. So then what we're looking at is the value of that lease is not $50,000, which clearly is what you're going to pay, $10,000 times 5 years. When you present value it, it's $45,797.07 at that point. So then the entries are very similar to your capital asset bond entries. Generally, when Jefferson County Public Schools is when we're doing those entries, we do them separately. So we do the capital assets entries as one piece and the long-term liabilities entries as another piece. We don't continue to associate those once the bond has been sold. But this is what the entries would look like. They're very simple. Understanding GASB 87 takes a little bit of doing, but the entries are not difficult at all. So we have an initial inception lease payment. So we're paying $10,000 per year at the start of the payment. So that entry has probably already been done out of general fund. And so you have to reverse that. That'll be a reconciling item between your district-wide financial statements and your fund financial statements. So we're reversing that entry. So debit the lease liability, $10,000, credit the expense for $10,000 to reverse what was already recorded in general fund, and then debit off a certain amount of amortization and against the lease liability. So that's simply because that payment was made at the start of the fiscal year, and so no time had lapsed off the lease term at the point when that entry is made. So like I said, there will be reconciling items between your fund financial statements and district-wide. So the carrying value of your asset will be a reconciling item on the fund balance sheet or at the bottom of the fund balance sheet. Then the expense recorded in general fund minus the amortization expense will be a reconciling item on your statement of revenues, expenditures, and changes in fund balances. By this point, I would predict that you are thinking to yourself, yes, he was spot on when he said this was a very dense, chunky subject. Okay, so continuing on. If there are special payment terms, those have to be factored into the calculation. We've touched on that previously. And you must be reasonably certain that something will occur. If there's a cleaning fee but the district expects to have cleaned it up themselves and not be assessed the cleaning fee, then you wouldn't factor that in unless you have all indications that the cleaning fee is not optional, regardless of how well you clean the building before turning it back over to the lessor. So like I said, if you have separate components of the like a cleaning fee or something like that, then I would calculate the present value of that separate cleaning fee apart from the present value of the monthly or annual payments and add the two together to come up with the value of the leased asset. All right, so then a few more things that to consider. If your payment schedule, most of the time your lease is not going to be effective July 1. Most of the time it'll be effective August 1, or it'll be effective January 1 or some random time during the year. So you may end up having the basic accrual entries if they're material. You may have accrual entries to book, which are really kind of separate from your lease entries. And then if you have a payment that's made at the start of a lease period, you may, if it's material, end up with a prepaid expense, because that, like in the case that we just looked at, we made a $10,000 payment at the commencement of the lease term. And so that $10,000 payment is if the lease term starts April 1, and that $10,000 payment is the first annual covers the first full year, then only 1/4 of that has been that term has expired. So the rest of that $7,500 might be a prepaid expense. Let's hope you don't have to get into that kind of detail. And then if you have a payment at the end of the term, so if let's say you have an August 1 payment and payments are made at the end of each year, then you may have to book an accrued liability for 11/12 of that payment. Hopefully they're not going to be material. I don't think that any of this is going to be material for Jefferson County Public Schools, but hopefully they're not material for y'all. GASB, in my opinion, GASB was pretty hesitant to have districts or governments recalculate due to changes. If there's some kind of an unforeseen change in the lease term, you may have to. If there's some kind of unforeseen change in the circumstances, let's say you have a one superintendent who is all in on community-based instruction, and so you're leasing a facility to use as a community center and tutoring site in a region of your county. And then you are certain that you're going to extend after the initial 3-year term lapses and extend for another 3 years. So you initially set it up as a 6-year lease, but as long as the other party doesn't have termination rights. So you initially set it up as a 6-year lease. If your superintendent then retires and your new superintendent thinks that's ridiculous and we need to focus on reading, writing, and arithmetic rather than community centers, then your circumstances may have changed. If there's a material change in your interest rate, I can't imagine why that would come into play. But only GASB is pretty clear that only significant changes should result in a recalculation. So then the footnotes, I've touched on this a little bit, so I'm not going to dwell on it too much. You have the right to have a separate leased assets footnote and a separate long-term leases footnote. What I'm going to do is group them into the capital assets footnote and into the long-term liabilities footnote. And there's a schedule that probably every single school district in Kentucky has, and probably every government in the United States has, where it rolls forward your capital assets from last year to the current year, and where it rolls forward your long-term liabilities from the previous year to the current year. I would have those listed as separate items on separate lines on those roll forward schedules. So leased technology, leased vehicles, leased buses, whatever you want to call them. And then I may, especially if it's the year of commencement, I'll probably have a short descriptive paragraph describing the leased asset terms, any variable or performance-based payments, termination penalties or fees, anything like that. And then in the long-term debt footnote, I would discuss the term of the lease and any termination fees or termination rights or extension rights that may affect that term. And then you roll it forward just like your capital assets. And we already touched on the long-term liabilities. Just make sure you don't duplicate information in both footnotes, but I'm going to end up having them in both places. So looking at going briefly through the journal entries. So on the district-wide financial statements, you're going to debit your leased asset for the present value of the lease payments and any additional payments. In this example, we have cash paid upon commencement, and then the lease liability. So the amount of the present value of the lease payment stream is actually $4,579.71 in this case. But there was a payment upon commencement, so an initiation fee, a commencement fee, a start of the lease fee, down payment, whatever. And so since that was paid up front, the present value of $500 is $500. So I just present valued the lease string at 4,500 and then added the commencement fee to it to get a leased asset amount of $500. And then annually during the lease, you're going to be debiting off the liability, crediting off the or debiting interest expense for the amount of basically the difference between it's basically the amortization of your present value discount and crediting cash for the $1,000 that you pay. Now, this is excluding any entries that have already been made on the fund financial statements at this point. And then you're amortizing the value of your lease and crediting accumulated amortization over the course of the term. And then at the termination, you're going to be eliminating the leased asset against the accumulated amortization, which should equal. So, like I said, this is designed to be more of an implementation guide at this point, rather than something that's effectively used in a presentation. But so then the lessor journal entries. So the lessor journal entries are similar, but they are different. They're in here. I'm not going to spend a lot of time on them because most of the time school districts will be the lessee rather than the lessor. But I wanted to give you access to both scenarios in case you had them. So that is the end of my presentation. If anybody has any questions, I do see something. Oh, we have a poll. Oh no, that's the last poll.
Yeah, we're through poll number 3 right now.
So that's the end of my presentation. Feel free to reach out to me or Steve, like Steve said, he'll be sending out the slides later on.
Appreciate it, Eddie. Appreciate it, Eddie. I had my headphone on top of my head. All right. Well, next we have Marshall Smith here from KDE to discuss some common audit issues, talking about some findings and just some compliance things that were found either from us and or the APA, and looking at the 2021 audits actually. So I will pass it along to Marshall so he can give you some good information on his side.
All right, thanks, Steve. As you mentioned, Marshall Smith, I'm branch manager of the district financial management branch. We handle everything with your financial audits. When we get your audits in, we do our own review of them, and then after that, we send them to a contractor agency that reviews them for technical issues. And so we just want to take a chance to go over some things that we saw last year. At KD, we're responsible for collecting financial data for all school districts. We get requests for information. We get them from the governor's office, from the state budget director's office, number of members of the legislature, as well as the general public. We get them from news outlets, as well as citizens. So it's so we have to have the data, and it's important that we have accurate and complete data, and it's also important that that data is recorded uniformly, so that when we're expected to produce an expense number for all districts, or if we're expected to provide information for comparison, that information is reliable. And so a big part of our review will always be comparing the audited AFR, audited balance sheet to your financial statements in your audit report. We simply don't have the manpower to send people out to each district to go through your books one at a time. So the audit report is the closest thing we have to that. So we'll be spending quite a bit of time doing a comparison between the two. The audit contract that everybody just signed and turned in, it also requires the audited AFR, audited balance sheet, to be in agreement with the financial statements in the audit. So that will be something we expect. Next slide, please. I listed some things that came to mind quickly when I thought about the variances that we had last year. Out of the list, the biggest few that I could think of would probably be the ending fund balance, the classifications of the ending fund balance, whether it be unassigned, restricted, or assigned, as well as capital asset issues. We have some guidance for that, and that's on next slide, please. It's listed here. I have a link to our webpage for fund balances, revenues, expenditures, chart of accounts. We keep the chart of accounts available for both the new year and the old year. Timing issue right now, the audit reports are a year behind, so we keep that available. As we also have GASB 54 and fund balance information. We also have some stuff on there for capital assets. We encourage everyone to reach out if you're having trouble or you're not sure about something. Please feel free to go ahead and reach out to us while you're in it. Don't wait till after the fact for us to look at it. If we can get a start on things and help figure them out, that will help make our review a lot smoother and hopefully save everyone a lot of time. Next slide, please. This is a document that we have available. I updated the link. The link changes occasionally. It's a little bit difficult to find on our webpage. If you're wanting to get to it, you're having trouble locating it, feel free to give me an email, send me an email. It's kind of a lengthy document, but it does a good job, I think, of having some examples out there so that if you're in a hurry, you need to quickly figure out something, you can go to it and get what you're looking for, in a quick example. But it also has lengthy explanations of things. So if you're really wanting to understand the nuts and bolts about how some of these processes work, it's out there for you. Next slide. After we do our review, we contract with an agency that does a technical review of the audit reports, making sure that the audit reports are following auditing standards. Also a second check to make sure that accounting standards are applied correctly. Kind of the nature of the beast. We're a year behind, so currently the 21 audit reports when we did last year are are being reviewed right now. We hope to release those results soon. Also keep in mind for the auditors that the contract, it requires anything noted in the prior year in this 21 audit report, it requires it to be corrected for the 22 audit. So important information there. Also, districts keep in mind, because sometimes these the results of the debt review will require this 21 audit to be reissued. So just make sure you have if it is, you have the most correct, most up-to-date version of the audit available in on file at your district. But some common things that we saw, and these will be things we saw in the debt reviews of the fiscal year 20 audits, but we're footing issues, mathematical issues, and amounts that didn't agree to each other within the audit report itself. Next slide, please. Something new for this year, we went through the 21 audit reports and categorized and recorded the audit report findings. We saw that statewide there was 24 findings, and then we classified those according to the subjects, what the audit findings were about, and just to try to get a feel of what things districts are having trouble with statewide overall. Compliance had by far the most, but also that's the broadest category. That covers both your state statutes as well as federal statutes and grant requirements. Some of the things that we saw with the state compliance, making sure that the working budget gets submitted to KDE timely, getting the budget published in the newspaper. We also had a few districts that didn't get their AFR published in the newspaper. So federal compliance items, some I didn't even think about were payroll taxes, getting them submitted timely, as well as some special rules for maintaining records on federally funded equipment purchases and documenting meals served for your cafeteria, making sure that you have that documented for your reimbursements. If you don't have it properly reimbursed or properly documented, the federal government could disallow some of the reimbursements that you've gotten, and it could cost your district some money. Also, finding we saw was failure to submit all the reports needed for acquiring or construction of real property. Some of the other categories on there that had a few year-end closeout. Those noted some missing payables, missing receivables, financial the AFRs needing adjustments, or just in general the books not being ready for the auditor to do their process, their procedures. Also on there, just general internal controls. Just to sum that up, making sure that you have a control environment that ensures complete, accurate, and timely recording of transactions, as well as a control environment that ensures that the prevention, detection, and correcting of any misstatements. Next slide. We also
Just so you know,
logged in.
Marshall, I put your charts on the next slide, so they would
Okay.
they'd fit a little better. Just so you know.
Okay. Thank you. We also categorize all the management letter comments. Statewide, we had 762. We divided those out between those that are red book comments and what we call general, which is anything that's or everything that's not red book. Of those 762, 177 of those comments were repeated from the prior year, so they were things that hadn't been corrected. Next slide, please. Here we have broken out into categories. For the general, compliance here was also a big one, just because it's a broad category. We covered that in our audit findings. So common purchasing issues were unauthorized or undocumented procurement card purchases, not following procurement rules or regulations, the lack of board approval for purchases, purchase orders that were subsequent to the invoice, and paying interest on credit cards. We have a documentation category. We had missing reports that when the auditors went through there and reviewed the books, they couldn't find certain reports that should be due, as well as time record for federally funded employees. That's something that becomes more critical for employees that are partially funded through a grant or partially funded through multiple grants, is being able to prove that they're actually spending time on the grants as they're being reimbursed for. Another category there, approvals. We notice a number of comments on unapproved expense or travel reimbursements, unapproved procurement card purchases, and as also unapproved journal entries. On the red book side, revenue receipts was our biggest one. We know several comments were about bank deposits not being made timely, supporting documentation being incorrect or not there, deposits that were short of what they should have been, or deposits that didn't make it to the bank at all. Also noted that deposit tickets were they were not initialed or were missing the signatures. Also on that one, the forms category, missing forms, incomplete or inaccurate forms, or forms that were completed untimely, not timely. The last category I'll go over real quick, expenditures. In Redbook, we saw a lot of comments on allowable expenditures. Some of those specifics were expenditures related to the fundraising for an individual or a family's personal benefit. I think there were a couple on bereavement or families that had went through a loss for funeral expenses, and also staff-related purchases. That was noted quite a bit. Some other things was expenditures that lack supporting documentation, checks without dual signatures, and also just payments that were inaccurate next to the supporting documentation. Next slide. For the new 22 audit, there's just a few things I want to bring up, remind people of. What has traditionally been the management letter comments spreadsheet is now the audit findings and management letter comment spreadsheet. We're just asking you to add any audit findings to that spreadsheet when you submit to us. There's usually not a lot of audit findings statewide, so I don't think that'll be a significant burden for anyone. There's also a number of new auditing standards that are now effective for the 22 audit reports. The audit contract spells those out. Just asking districts to be aware of that and just know it may change some of the procedures that your auditor is performing. And lastly, we're asking that all audit reports and management letters, if they're submitted separately, are given to us electronically. That could be done through the finance reports email box. If anyone has any trouble with that, getting them to us, we know some of the rural districts may have some internet issues. So if you have any trouble with that, just reach out to us and let us know, and we'll work that out with you. Next slide. And that was it. If anyone has any questions, or you need or have trouble getting to any of the guidance or any of the documents that we brought up, feel free to reach out, and we'll help connect you to them.
Thank you, Marshall. And getting a lot of questions on the polls, and that seems to be a lot of our questions on the polls and answering those, and those who are guests and not guests and those kind of things. So please bear with us, and yeah, if you answer the questions, or if you text or chat your answers, we'll give you credit. So we're not going to be sticklers for all that, because we're trying to figure this out so that we can offer credit every time we do these webcasts, because that's the goal, is to be the best stewards of our time and your time, and offer credit every time we do these meetings, whether they're 1 hour or half an hour. Well, not a half an hour probably, but at least 1 hour, one credit, and these that are longer and time duration and all that kind of stuff. So anyway, all that to say, give us patience, give us grace, and let's see, this one needs to close. So I'm going to close this one, and we'll probably have a couple more before we close out today. But we will do our best. And most of even the guests, I've checked, as you've been asking the questions, most of the guests have even come through. I can't say that all of them have, and I don't know why. We need to do some more testing, I guess, on our side to figure out why some guests go through and why some don't. And that's kind of hard to do. So I guess I'm going to have some testing with some districts and some outside folks to do polls with us to figure out why some poll answers come through and why some don't. And it appears that maybe some of the poll questions only come through the chat, and then some come through the live feed. I think the live feed ones come through those who are not guests, regular or probably district folks. So, but anyway, getting away from our subject. So moving along to financial publications and requirements and book fairs and sales tax. So moving along to the next slide, what we're going to talk about the next little bit is about reporting statutes, and why we're going to talk about that is because even though this change back in 2019, as my first little bullet talks about here, is I still get lots of questions about that, or we seem to, Jay and I seem to get a lot of questions about this each year as this summer season rolls around and audit season rolls around. What to report, when to report it, and how to report it, what can we do, what's required and all those kind of things. So I thought, well, this would be a good time to do a refresher course on those that have been around a while, and also to offer some suggestions for those who may not have heard this before. So there's 3 reporting statutes that I'm aware of as far as financials go, and they are KRS 424220, 250, and then KRS 16463. And so back in 2019, about 3 years ago, is when things changed for us. And because it used to be everything was in the newspaper. Even though the internet's been around for 20, 30 years, 25, 30 years, everything was published in the newspaper at one time or another, as far as budgets and financials and all that kind of stuff. But in 2019, we finally got through to, well, somebody did finally got through to the General Assembly that it would be more efficient and more cost efficient to publish a lot of these lengthy financials on district websites, and then maybe just post a little blurb on where to find that in the newspaper. And so that's what happened about 3 years ago. And so what happened in 424220 in 2019 was it transferred most publication requirements to KRS 16463. And so in doing that, you are no longer required to publish salaries of all your district employees and the list of vendors that expend over $1,000 like you had to do prior to that time. And so I remember doing that, and that was just a cumbersome. I mean, it wasn't hard to do, but it was just something you had to do each and every year. But that's no longer required because of this new legislation 3 years ago. So moving along to the next bullet, and then we still get questions on this. And so we thought we'd set the record straight. So you got it here on the Finance Officer and Auditor Workshop here in 2022, 424250. You are still required to publish in the newspaper your annual budget. And so that's one thing that is still required to be in the newspaper. So just, and all of these links are, when we send out the PowerPoint here, these links are hot links, so you can click on those and go to that. But it actually, this one is only like one short little paragraph, 44250. Excuse me, let me get a short little drink here. But the 44250 is a very short paragraph saying that the annual budget is required to be published in the local newspaper. So moving along to the next bullet there, KRS 16463. Here's where the meat and potatoes are now compared to where they were 3 years ago. So what it does is it requires superintendents to annually publish the complete financial statement and school report card, whereas a school report card didn't exist several years ago, but now it does, and it is required to be published for public consumption. And so this can be done on the web, it can be done in the newspaper, and or the library. So can you imagine publishing the school report card in the newspaper? I mean, I haven't even talked to Jesse about this, but I mean, I can't even imagine that thing being on the news in the newspaper. But anyway, that's an option. So if the web or the library is used or chosen, the newspaper notification still is required to be used to show the location of where that is. So in most cases, districts are going to choose to put these on the web, the financials and the location of the school report card, so which is on KDE's website actually. So that's the rules, and that's where they are, and those are the KRSs that back those up. So if you have any questions, feel free to reach out and ask me on those. But anyway, that's the publication requirement. So the only thing that's technically required to be fully in the newspaper now is your annual school or school district budget. So if you got any questions, just let me know. All right, next slide. All right, something that probably this spring has sprung up, actually, is charging sales tax on school book fairs. And Scholastic has brought that to the forefront, and I've gotten calls from school librarians and school bookkeepers, and I think maybe one or two finance officers saying, why are they asking us to charge sales tax when they never have before? And so I was like, that's a good question. And so I got to digging into it and found out that they shouldn't be. And so, I've got a couple pages here on what what we have involved or what we have gone into as far as finding out why, the whys and the hows, and what stage all that is in. But what it boils down to is Scholastic has, in their mind, gone from a wholesale sales group of books to a retail sales people. Well, that doesn't matter to Kentucky or to local librarians, school librarians, or to school districts. Doesn't matter what kind of salespeople they are. And so that being said, schools shouldn't be charging sales tax regardless. And so I actually got in touch with Scholastic, in touch with Department of Revenue and Scholastic separately. Department of Revenue is on our side because schools don't pay sales tax on one hand, and they don't charge sales tax on the other hand when they sell books. And then Scholastic is on the other hand saying, well, we got 50 states and they all charge sales tax, blah, 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 or the ones that do charge sales tax. And I'm like, well, it's not a cookie cutter process where you just tell all 50 states that you charge sales tax. Each state is different. You've got to go to each state and figure out what their laws are. And so I had them get in contact with our sales tax folks at Revenue. And I literally this morning before our meeting talked to Scholastic, and they have been in touch with our sales tax folks at Revenue. And I don't think that Scholastic liked what they were told, because the sales tax people told them exactly what I told Scholastic, which is KRS 139-497, which is on this page here, that they are exempt from charging sales tax when selling. Because Scholastic is telling the folks at schools to punch the button to charge sales tax, and I've told them to not charge sales tax. And so that's where Scholastic is kind of giving us pushback, saying, well, you've got to give us you've got to submit to us the sales tax on the books you sell. And I'm telling the school districts, no, you don't, because our laws don't allow you to charge sales tax. And hopefully you auditors will back me up on this in that effort as well. And so, all right, go on to the next slide. And so what I found out this morning is Scholastic evidently didn't like what the first level of folks at the Department of Revenue and Sales Tax said about it. And so they're reaching out to the management there. And I don't know how that's kind of where it stands right now. So I don't know what they're going to find out, but evidently Scholastic is huddled up in their own little world in how they're going to handle the situation. But, the sales tax people in Revenue are in the same agreement with what we're thinking, and what they've told us, that they should not be charging sales tax. So if anything changes, I will let you know, but you should tell your folks, and what I've told your folks when they've called and emailed me, is that they should not be charging sales tax on library sales or book sales from Scholastic. So anyway, just wanted to give you an update on that. Next slide, please. And so, okay, so then a little bit more on taxes. And let me throw up another poll before we get going. And then Crystal Smith is going to talk a little bit, and this is just a one slider, but it is an update on things that some newer folks might not be aware of, that you need to be aware of as far as tax rate levies in your district.
Hi, everyone. My name is Crystal Smith, and I work as the branch manager in District Funding and Reporting Branch. You may have already got my email about a week or so ago, but oh, Josh, can you flip the screen, please? Yeah, perfect. Thank you. So KDE recently conducted a review on the statutory requirements as it pertains to the advertising and public hearing requirements in KRS 160-470. The review determined that the statute permits a local board of education to adopt a tax rate up to and including the 4% tax rate without advertising or holding a public hearing. In the past, KDE had provided guidance that your board was required to advertise and hold a public hearing if they exceeded the compensating rate. Some things that have still stayed the same is if your board elects exonerations, they may be included in the property tax adoption, but will not trigger any additional advertising or hearing requirements. Also, unless the local board is adopting a tax rate above the 4%, not including the exonerations, they must adopt a property tax rate within the 45 days of the Department of Revenue's property certification for the school district. If this requirement is not met, then the compensating tax rate will be applied to this year's tax rate bills. And then with any good faith guidance from us, KDE, we strongly recommend that you engage with your local board attorney on this matter. So I noticed there were some questions. I'm gonna look at those. There's one from Kim concerning publishing. She's talking about 424-250 publishing budget. This KRS refers to 160-470, which applies only to if your tax levy exceeds 4% above compensating rate. If your levy is equal to, so I'm kind of confused about your question, Kim. If you want to reach out to me, it's Crystal Smith at education.ky.gov, and maybe we can. Then I can also send out the email on this to everyone who's listening. But I'm kind of concerned. I'm not following her question. And then like Susan has a really good question too. Has anyone reached out to their district's attorney for their advice? So I'm not sure. I haven't heard anything here at KDE. Do we have any other questions about this? All right. Well, if you have any questions, please reach out to me. Again, it's Crystal Smith at education.ky.gov. Thank you, guys. Thanks, Jan. So Jan, yeah, so Jan Johnson, she just read that her board attorney did agree with the chart on the screen. So thank you for that.
All right, so we'll open up to any questions on any topic that we've discussed today or anything else. All right, so if we can hang on for 10 more minutes, we can get 2 hours of CPE. So any questions on anything? Uh-oh, Jan's got 5 more days. I wish I had 5 more days.
Steve, there was a question from Christy
Okay.
commenting. Oh, that was it, Christy. Hold on. There was one about. It's hard to arrow kind of.
Full working
was-
budget.
Yeah.
It doesn't specify. It just says budget. Jay, do you want to comment on that?
I think Chay's in another meeting.
Okay.
I believe it's talking about is the one that's in October. So that's the working budget, correct?
Okay. Yeah.
Yeah. It is talking about the working budget because I've looked at that statute.
Okay. Okay. So yes, Tracy, that would be the working budget.
And there was one more. I forgot who it was. And it was talking about the AFR. Okay, so this is for Crystal. She's audited AFR location. Yes, it does need to be. That's your 424 dot 250. It still requires, yeah. Or no, that's one. No, that's I'm sorry. That's I think she's talking about where we need to like if you publish it or if you post it at the local library, it needs to be put in the paper as well, where the locals can actually go and see it. So that's your AFR. Yeah.
You see Eric's question. The poll has a yes or no if you've been listening. No. A couple people have answered no. Like I said, you could answer yes or no, and it's fine, just as long as you answer anything. That way we can record your answer.
I think there was one earlier, and it might have been toward Marshall about $1 difference.
Yeah. Let's see. Let me find that. I recover it. Okay. Let's see.
We'll probably go through all these and see what questions we missed.
I was looking for the
Oh, there it is.
question that.
Why in the disc reviews are you worrying about $1 differences? That's not our desk reviews.
It's
We
the
only worry
auditor
about
public,
material differences.
Yeah, that's correct. The desk reviews are they're currently done by the Auditor Public Accounts. They do expect the audit reports to be mathematically correct. Hopefully we're not requesting audit report to be reissued over $1 or something like that, but there are instances where statements don't add up to thousands of dollars being off, and in instances like that, they have been asking that they be reissued. But like I say, that's something through our desk review that we look at the mathematical accuracy of the statements.
All right, 6 minutes, folks. Come on, hang on with the 6 more minutes. Okay. Any other questions? Trying to think anything else we can throw out there. As always, we've updated our finance calendar. I know that. I know Gail's worked on that. We've added a couple new items on there, or are going to. So take a look at the finance calendar. That's always helpful, I know, for new folks. And if you've never used it before, it can be beneficial to keep up with dates and things on what's due, when it's due, who to contact if you have questions, those kind of things. Audit contracts, those?
Yeah, those have been approved. We are still waiting to receive the signed contracts back. So if you requested the signed copy of your contract, we don't have it yet, but all contracts have been approved by the committee.
Is there a threshold for publishing the working budget? Crystal? No, I think all budgets have to be published.
Yeah,
as far as budgets go.
it looks like that's two different things
Mm-hmm,
for me. Yeah. Susan, maybe I'm misunderstanding, but it looks like that's two different topics.
I think so. All right, we're down to 5 minutes. Let me do one more poll and then that'll get that part out of the way. So I think we need 6. Let's get one more just for good health. Make sure I'm got the right number.
So let's go back to
no,
Kim's
it's
question.
no, somebody had a question on Scholastic. Yeah, I mean, I did what I could on Scholastic. Susan had a question on Scholastic. Yes, I mean, they've already contacted me on Scholastic. I mean, Scholastic, the management has called me on Scholastic, and their tax folks and everything else. And literally, I talked to them this morning. Excuse me. And they've already been in touch with the Scholastic folks. Have been in touch with our revenue folks at sales tax, and they're waiting. And they didn't like what I guess, lower level people told them, which is what I told them. And so now they want to talk to management at sales tax, and so I don't think they're going to get anywhere with them either. But I'm just letting you know what I know at this point. And so I think we're going to win, and that they're not going to charge sales tax. But I just wanted to give you an update on how that stands. So I'm still telling people, and I would hope that you would tell your people that we're not going to charge sales tax at this point, because I don't see a reason for or an out for Scholastic to be able to tell us that we charge sales tax, because we're not supposed to, and it's not in our statutes that we charge sales tax for fundraising. So that's just how I feel.
I'm going to revisit Kim's original question, guys, on that one. I'm not really sure. I'm going to research. I don't have the statute, the 424, 250 looked at. I'm not really, I don't have it pulled up. So let me look at that, and then I will send an email out to all finance officers on that one.
Okay. All right, we're less than a minute away, so unless anybody has more questions, I think well, let me close that thing, that poll. And like I said, we'll be flexible, so don't worry. But hopefully you answered the polls if you were able. But but if in the future, if you're a guest, please fill out your full name, because if you just put one name and no email or something, we don't know who you are. So it's best to provide your full name so we can get in contact with you or give you credit where credit is due. So just want to let you know that. So yeah, thank you, Lori and Lori Oakley, and provide your name in the explanation there. So thank you all for joining us today, and hope you got some good information and beneficial for your audits and your school district. And if you have any questions, feel free to answer or ask us. And like I said, the PowerPoint and the video and all of that will be available afterwards. We'll send that out once we get it ready to go. And if you need to send it to others, that'll be you'll be able to do that as well. So have a good day, have a good summer, and we'll see you soon. Thanks a lot.